This is the Asia Trade. I'm Shery in Tokyo.
I'm Haidi Stroud-Watts in Hong Kong. The top stories this hour. Caution in the markets as traders digest mixed earnings from big tech ahead of next week's US election and Fed decision. Alphabet's third quarter revenue beating estimates helped by AI-fueled cloud growth, but AMD slipping in late trade as its sales forecasts fall short. And Kamala Harris set to speak in Washington while Donald Trump heads to Pennsylvania, seeking an election edge a week out from the vote.
That race still a toss-up right now. We are expecting to hear from the vice president really argue that a second term for Donald Trump would be one of chaos and division. But so far, we are seeing really the early voting take place in full swing across the country, and still both candidates in dead heat at the moment. And this as Trump trades continue to gain ground. We're seeing Trump media, for example, rallying more than 300% over the past month. And all of this, of course, as we're awaiting just the FOMC to happen 2 days after the elections as well.
Yeah, tough timing, Shery, particularly when it takes, into account how difficult some of these, economic signals will continue to be, because the labour market is obviously front and centre alongside the strength that we continue to see in the US consumer. Now, on the latter point, we do continue to see more evidence of that, right? The sort of confidence that we're seeing when it comes to how US households and consumers feel about the labour market, the state of the economy. We saw consumer confidence rising the most since 2021 on the back of these factors in October. The Conference Board's gauge of confidence jumping 9.5 points to 108.7. That is the highest level since the start of this year. They're optimistic when it comes to job availability, business conditions, their own financial situation. At the same time, we're, of course, also looking ahead to the key job numbers going into the end of the week. The JOLTS jobs openings data, in the meantime, in September actually fell to the lowest level since January 2021. But, of course, we know with the Friday data, it's going to be a difficult one to pass, given that we know that there's going to be, seasonality impact at the likes of the two hurricanes, as well as the work stoppage at Boeing also weighing there.
And all of this, really, as investors are trying to digest earnings, right? I mean, in late trade, we saw Alphabet rallying. We have the Nasdaq Composite now hitting that all-time high. At the moment, we're seeing U.S. futures also gaining ground. And all of this, as we saw Treasuries also pause that sell-off. Despite that, we are seeing Treasuries really headed for the worst month in more than 2 years. Expectations over what's happening in the U.S. elections. Will we see another Donald Trump presidency? Could that fan inflation? Could that send yields higher? And of course, we have really a lot of bond issues and notes coming up at the same time. And this set of mixed data that we got that you just talked about really kept the dollar sort of unchanged in the overnight session. So on the other side of that trade, we had the Japanese yen also sort of drifting around that 153 level. Take a look at how Asian futures are coming online. Australia coming online in that staggered open, not doing much at the moment, but Nikkei futures pointing higher, 0.3%. We had some gains for Japanese stocks as the yen continued to weaken. All of this ahead of the Bank of Japan policy decision just tomorrow. Not a lot in terms of what's expected from that rate decision, but we'll continue to watch whether we should be on the lookout for intervention from Japanese authorities.
We are also, of course, watching big tech, the AI theme as well. Shares of Alphabet and AMD, among others, in late trade off the back of those earnings announcements. We're seeing Alphabet shares pretty resilient, still 5.5% higher there. But advanced micro devices, really what we're watching in terms of the downside. Our tech reporter, Annabelle Jewellers, has the details. So let's start off with the good, I suppose. Alphabet, what jumped out?
Well, it was just really all about the cloud. And, of course, when you think about who competes in this space, well, actually, Alphabet's in third position. They're behind Amazon and also Microsoft in this space. But a lot of analysts will tell you the pie is just getting bigger. So everyone can have a larger slice of it at this point in time. But essentially, we had those figures coming out, and sales for the third quarter, they actually beat. And, again, it comes down to that demand that we're seeing around its cloud infrastructure. Revenue at $74.6 billion. The projection had been for about $73 billion in in terms of what else we were tracking, there were figures around advertising, subscriptions, platforms, devices. These all did a bit better than had been expected by analysts. So a good quarter, really, in aggregate. What else we heard in terms of the earnings call, it was also the focus on how much money Google or Alphabet is putting into this space and how much they're actually taking out of it. And Sundar Pichai, the CEO, made a point to say that actually the cost of operating the AI tool is coming down. They've been able to reduce that substantially through a variety of different ways. They're also looking at their energy needs as well and how they're actually going to be able to power this sort of infrastructure. And they said that they're looking at investing, as we know, in different types of energy sources, but that includes nuclear power.
A little bit of concern over AMD, though, especially about AI sales growth.
Yeah, this was a really interesting one to track. Of course, AMD, one of the sort of growth drivers of the business is its so-called AI accelerator. This is a type of hardware that essentially more efficiently supports AI workloads. And in this sort of space, it's really going head-to-head with NVIDIA. Of course, AMD is falling far short of NVIDIA in this space. And actually, if you were to take a look at not only their revenue from last year, their projections for this year, they're really quite a minnow in this space. What AMD said essentially was that even though their third quarter revenue beat the average analyst estimate, it was that focus on what they indicated for the fourth quarter. And here it fell just a little bit shy of what had been projected. So it's seen at $7.5 billion in the period. The estimate had been for $7.55 billion instead. So again, just a little bit underwhelming on investors who really have, of course, very high expectations around these AI chip players.
Annabelle Drewler's there with the latest on tech earnings. And of course, we continue to watch the latest developments around the U.S. presidential election. Democratic contender Kamala Harris is delivering a speech on the National Mall in Washington. We're expecting her to come out any time now. Her campaign is billing this as her closing argument. Republican Donald Trump is heading to the critical battleground of Pennsylvania. Let's go to Washington and our political news director, Jody Schneider. Jody, so what's notable about these rallies and the cases that they'll be making to voters?
Well, Shery, this is the week of closing arguments. So 1 week from tonight, we will be talking to you about the results of this election, which seems like we've been talking about for years, maybe. But it is all coming down to these closing arguments. Kamala Harris is making hers at an interesting place on the National Mall at the Ellipse, the very place where on January 6, 2021, Donald Trump encouraged his followers to go to the Capitol, and we know what happened then. And the case she's going to be making is that she doesn't want to look back at that. She wants there to be a different kind of America, and she's also, of course, harshly criticizing her opponent for what she says will be if an era of division and derision if he does take the presidency again. He is going to be making his case and has been making his case to voters that another 4 years of Kamala Harris would be horrible for the country, saying that inflation, in particular, and the situation at the southern border are her fault as much as Joe Biden's. That as vice president, she really was, part of the decision making that led to what he sees as the ruining of America. Interestingly, though, given some remarks at a Madison Square Garden rally for the former president on Sunday night, where there were some remarks made by a so-called comedian about Puerto Rico, Donald Trump tonight is speaking in Allentown, Pennsylvania, which has pretty heavily populated by Puerto Ricans and Latinos, and he will be really having to face some what we expect are some protests there. Today, he tried to both distance himself from those remarks made at that rally and also to try to turn this to Kamala Harris by talking about her failed border policies.
Traders are making bets in the prediction markets, and those markets are heavily slanted towards Donald Trump. Is that a prediction of what will happen on election night? We know how difficult this sort of forecasting or any sort of forecasting when it comes to US elections has proven to be over the past few years.
Yeah, the polls are really showing a neck-and-neck race, as you noted at the start here, that we really see it kind of going either way in the Electoral College, which is what matters. These swing states, these 7 swing states, really will be where this will be played out because they have to get to 270 Electoral College votes to become president, and they each have, a number of big states in their what is likely their category. So it comes down to these 7 states, and the prediction markets really don't look at that. Also, the people, many who are betting in the prediction markets, really are betting for Trump because they think things that he will favor what they want in the next 4 years, which is often lower corporate taxes and some of his policies. So I think you have to take these with a pretty big grain of salt. But of course, it's been a big talking point the last 2 days. And as you noted, Trump's, the Trump trade, the so-called Trump trade, given his properties and his stock, has been up significantly in the last 2 days. I don't think that necessarily translates to a win for him, but it is making some money on the trade.
Political news director for Bloomberg TV and Radio, Jody Schneider, there with the latest. And coming up on the Asia trade, Allspring Global Investments joins us to talk about how emerging markets are the enablers of AI. Plus, we'll be talking about the state of climate financing in Asia. A closer look to South Korean security concerns around the US election. Much more ahead. This is Bloomberg.
Take a look at how Treasury futures are looking right now. We saw a breather for that ongoing sell-off this month. We're still on track for the worst month in more than 2 years. Since September 2022, the 10-year yield around that 4.25 level. A lot of posturing for next week's U.S. election. Option traders seeing the risk of an even steeper sell-off as investors are just gauging whether if we get President Donald Trump victorious in this election, he'll push yields higher with tax cuts and tariffs. Our next guest sees more potential easing by the Fed later this year that could curb the strength of the U.S. dollar. Alison, senior portfolio manager and head of total emerging markets equity team at Allspring Global Investments, joins us now. Alison, great to have you with us. How are you factoring in what could potentially happen with the U.S. election and tariff cuts, tax cuts, tariffs as well, and what's happening in terms of the Fed being able to ease further?
Well, thank you for having me. I really appreciate the opportunity to talk to everybody here. I would say that what we're doing is really focusing very carefully on the exposures we have in our portfolios with regards to the companies that do export from emerging markets and those that really service mainly their own economies. And I think that in the larger countries such as India and China, you have a very strong either domestic recovery or a multi-year structural story. So with that, we really have heavily leaned on local service companies and local product companies because those markets are so large. But with regards to looking at export companies and how they may be impacted, we're very careful to look at companies that are not in sensitive areas such as high security. Of course, many of these companies have already been sanctioned. So we are very careful in our stock selection, and these markets remain very heavily driven towards stock selection.
How much of that selection is in the tech sector and potentially some of those enablers of artificial intelligence as we have tech earnings this week underway?
Yes, I mean, it's a very nice coincidence that we're talking about the earnings of the large U.S. companies, because what we think about in emerging markets is how you wouldn't have an NVIDIA if you didn't have a supply chain that originates in Asia in particular. And it is very critical to think about that. The longevity of AI, and it will go on for a very long time, will be driven by companies in, South Korea, in Taiwan, and even to a certain extent in India as well. And whether that be chips or testing or equipment or other types of components, it will all be very critical. And, we look at things with an eye towards shareholder return. So these companies also happen to pay nice dividends and also buybacks.
I note that you're slightly overweight on China, which is sort of interesting, and I do wonder whether this means that you are still structurally bullish on the sort of a demographic story, the growth story, even as we've seen that reversal of some of the, enthusiastic funds that went in after the stimulus was announced.
Yes, well, that's an interesting point. I think it is a little bit of a differentiated view on China, and we have covered China for the last 25 years. And there are opportunities, but they are very selective in certain areas. Even property can be an opportunity. Financial services, some consumer discretionary companies, e-commerce are still very nice opportunities at very low valuation. So I think it's just a question of, once again, picking these stocks very carefully, looking at the quality of those earnings and making sure that they deliver on what they say they're going to do. And also, we look as well, shareholder return does point towards quality, as well as looking at ESG factors as well. So, it's all about stock selection. It's not about any 30,000-foot view trends.
And do you think there are stocks that are relatively immune, even if there is a sort of a worst case scenario? Because we know that the outcome of the US election, may be hawkish or even more hawkish when it comes to the attitude towards China.
I think the knee-jerk reaction at the beginning, Heidi, could really be a little bit of a jolt, but I do think that could be a buying opportunity in countries like China, which, honestly, from the headlines are kind of vulnerable to these things. But I do think that the valuation support is very strong. The businesses are doing fine, the ones that we own. And we really feel that the corporates are very aware of the situation, and they'll do whatever they can to insulate their businesses. But once again, I think there are definitely, it's a very deep market. There are a lot of opportunities, not only in China, but also in Southeast Asia, in the rest of North Asia and India as well. So, across the board, we see good opportunities.
Alison, how are you seeing companies in Latin America, especially, say, Mexico? Because it's been really interesting in Donald Trump's presidency, despite the narrative, when it comes to business flows, these countries have benefited a lot.
I agree with you. And I think that there are still, the sentiment does depend a little bit on the outcome in the case of Mexico, but you do have a new president there. And while she may follow the president of, the lead that the previous president, AMLO, has installed, but we are a little bit hopeful about that things could change, be more business friendly. If the soft landing does happen in the U.S., Mexico will benefit. So I think that, whatever adjustment needed to be made, Mexico did sell off, and now it looks quite attractive. And then Brazil as well has a lot of, for us, nice opportunities at quite low valuation, but a variety of companies. We like some of the financial services. We like some of the consumer staples companies. So, they see deregulation and privatization as drivers in Brazil. So we like Latin America as well.
Alison, really great to have you with us. Alison Shimada, who's a senior portfolio manager at Allspring Global Investments there. Taking a look at, of course, on the latest earnings reports that we're following, Reddit surged in after-hours trading as its sales and forecast beat analyst expectations. The social network posted net sales of about $348 million in the latest quarter. That was well ahead of projections. It also expects revenue of as much as $400 million for the holiday quarter. CEO Steve Huffman says Reddit was profitable on a GAAP basis for the first time since going public in March. McDonald's third quarter sales fell short of Wall Street's expectations on weakness in global markets during China. However, the US was a bright spot, and the fast food giant says a $5 meal deal improved perceptions around affordability. The results don't include any impact from the recent E. coli outbreak linked to McDonald's Quarter Pounders.
We are certainly very sorry if someone got sick at our restaurant for eating an onion that we use in our QPC, and I am relieved that I think we are now past this and on the road to getting back to serving our customers.
Shares of Adani Enterprises jumped in Mumbai after nearly an eightfold surge in quarterly profit. The flagship firm of billionaire Gautam Adani's empire saw a 663% jump in net income, over $200 million. Revenue from Adani New Industries soared by 62%, and that helped offset a 25% revenue drag from its coal trading unit. More ahead on the Asia trade, this is Bloomberg. Goldman Sachs CEO David Solomon says it's hard to predict where the Fed will go in 2025, but he does expect to get a clearer sense of its policy path after the US election. Solomon spoke to us exclusively at the Future Investment Initiative conference in Riyadh.
I think there's an awful lot of attention on short-term rates. I'd actually be focused over time on longer-term rates. And, I continue to be concerned about the level of spending and deficits in the United States. I don't think that's a short-term, crisis factor. But unless we have policy change and get our spending and our debt under control, ultimately that's going to have a bigger impact on long-term rates than I think people are anticipating today. With respect to the short end of the curve, I think it's going to be very data dependent, and that data will be driven in part by what kind of policy we see coming out of the election. Yeah. And so I think it's important to watch carefully. It seems like the Fed has been relatively transparent that we'll get another interest rate cut before the end of the year, but after that, I think it will be very data dependent on what kind of policy implementation, what happens to growth, are the inflation numbers actually improving further? Those are all things I think the Fed will be watching carefully.
Can I just circle back to your first point vis-a-vis spending, though? 10-year Treasury is trading around 4.3%. Do you think that is adequately pricing in the fiscal premium in the years to come in the U.S.?
The market's the market, and so it is absolutely pricing in the premium that the market perceives today. What I would just say, if you look at the trajectory of our spending and our debt and the interest burden that we have, I think over time is through the rest of the decade, et cetera, we'll have to bring new buyers into U.S. Treasuries, and that will potentially have a risk of putting pressure on longer rates, unless we want to finance the whole Treasury stack at the front end of the curve, which would be a very, very significant policy shift.
Goldman Sachs CEO David Solomon speaking exclusively with Bloomberg's Shimada. Now, the latest stories on geopolitics. Australia is set to invest $14 billion over a decade to ramp up domestic missile and munitions manufacturing. Officials are expected to announce the program on Wednesday to produce such weapons at scale. The move comes as the current government looks to develop long-range strike capabilities in the face of a regional arms race. President Biden says Ukraine should strike North Korean troops if they enter the country to fight alongside Russia. U.S. officials believe Pyongyang has deployed 10,000 troops, with several thousand moving toward Russia's Kursk region, where Ukrainian forces are fighting Russians. Biden was also asked by reporters if he was concerned about reports of North Korean troops already inside Russia.
I'm concerned about it, yes.
Should Ukrainians strike back?
They cross into Ukraine, yes.
Hezbollah says Naim Qassem will become its new leader after long-standing chief Hassan Nasrallah was assassinated about a month ago. The militant group's main decision-making body announced the move online. Qassem has been deputy leader since 1991 and wasn't seen as the obvious successor.
A reminder that subscribers can watch us live and see our past interviews on our interactive terminal function. You can also dive into any of the securities or the Bloomberg functions that we talk about. Plus, join the conversation. You can send us instant messages. That's all at the function TV Go. This is Bloomberg.
Take a look at how we're trading across Asia early in the session. We are seeing the ASX 200 falling for the first time in 4 sessions. We are waiting Australia's CPI numbers later today, likely to show inflation slipping back inside the RBA's 2 to 3% target band for the first time since 2021. We are seeing U.S. futures also gaining ground. We had Alphabet rallying in late hours after earnings, and Nikkei futures pointing to the upside. We could see 3 sessions of gains for Japan. Haidi.
Shery, we're hearing that China is reportedly considering more than $1.4 trillion in additional borrowing in the coming years to shore up the economy, address local governments' debt risks. Let's bring our China correspondent Min Min Lo in Hong Kong. And, Min Min, part of what has made this slowdown so painful has, of course, been the deleveraging drive, right? What are we hearing now?
Yeah, so we're hearing, according to Reuters, who cited unnamed sources, that the government is mulling a 10 trillion yuan fiscal package. And to break it down, there'll be 6 trillion yuan in special sovereign bonds to tackle local government debt that will be raised over 3 years, and another 4 trillion yuan in local government special bonds to help these local governments purchase idle land and properties. And on top of that, there will be another at least 1 trillion yuan in other measures, including measures to boost consumption, and another 1 trillion yuan to recapitalize the bank. So overall, that headline number of 10 trillion yuan is at the higher end of estimates. But of course, the time horizon of these bond issuance, how those funds will be used, whether they will be front-loaded, all of these will matter as well. But I think what's key, it's the priority seems to be focused more on tackling local government debt, and the direct consumption stimulus is a little bit modest, and that could raise concerns about whether it's enough to actually fight deflationary risks.
At the same time, we're seeing these external trade pressures continue. We're not even into the US election just yet, right? But the EU tariffs on Chinese EVs are coming into force.
That's right. The regulations will be published today, and it looks like the EU is set to impose these up to 45% tariffs on Chinese EVs for certain brands. That includes the pre-existing 10% tariffs that had already been in place. And this is after months of intense negotiation, with both sides looking to come up with a sort of complex mechanism for price and volume control. But that really hasn't yielded any fruit so far. And that comes also as BYD is set to report earnings today, and while domestic sales is likely to be quite strong given some of the consumption stimulus, the subsidies that are given out by the government to encourage the upgrading of automobiles, investors will be watching very closely how BYD's profit margins and its overseas expansion plan could be impacted by these tariffs as well.
Bloomberg China correspondent Min Min Lo there. We do have breaking news at the moment. We're now hearing that Blackrock is in advanced talks to buy HPS Investment Partners. This is according to people speaking to Bloomberg that say the two sides are trying to reach an agreement by the end of this year. HPS, of course, could still opt to go down the initial public offering route or even a minority stake sale if the parties fail to agree on a valuation. According to the people speaking to Bloomberg, HPS would aim for a post-IPO valuation of $11 billion, and for a sale, it would actually seek a premium to that. Now, if this deal comes through, that would leave Blackrock, the world's largest asset manager, with more than $500 billion in alts. Haidi.
Well, Shery, China's managed to achieve leadership position in several key tech industries, including electric vehicles and renewable energy. This is, of course, in spite of big US efforts and EU efforts to slow the country's advances, especially in areas that threaten military superiority. Let's get some more on today's Big Take to bring in our Asia Government and Economy correspondent Rebecca Chong-Wilkins. So it's not for a want of trying. Even, you know, in the last days headed into the US election, we're seeing more efforts.
Yeah, absolutely. This story really looks at that fundamental question of how successful this sort of ballooning of tariffs, of export controls, of financial sanctions has been. We saw them sort of first start eke out into the first year in Trump's presidency, and since then they've ballooned into bipartisan effort. One of the only issues, in fact, that both Democrats and Republicans agree on. So this question of whether or not the US has been successful is pretty fundamental, too, to who we see next coming into power. When we think about technology in particular, essentially, aside from semiconductors, where the US has been more successful in restricting China's access and China's ability to develop those really sort of most sophisticated AI chips used for artificial intelligence, for military purposes, actually we still see that China has had pretty sort of incredible success, including by its own metrics, its own made-in-China metrics, when it comes to taking a stake in global leadership, when it comes to sort of meeting its own targets.
It's interesting because, of course, bipartisan hawkishness towards China is what we see in the US. dependent on that election result, though, we could see some meaningfully different implications and risks for Beijing.
I think that's right, Heidi. I mean, I think in both cases, both candidates aren't good news for Beijing. I don't think they're particularly keen on either. But there is a difference. Trump, of course, as we know, has continuously repeated this threat of issuing 60% tariffs. That number has even sometimes been higher than that. And that would be a significant hit to the Chinese economy. So his emphasis very much is focused on the trade, on the tariffs element. Kamala Harris, by contrast, has focused a bit more on export controls. She's seen, of course, as a status quo candidate, someone that would continue and perhaps extend the Biden administration's push to try and contain and curb the transfer of U.S. technology, its goods, its services to the U.S. She's also focused quite sort of soundly on this idea of national security, the strategic need to limit China's access to certain key technologies, and criticised Trump's plan when it comes to trade, saying that this is effectively a tax on the middle classes.
Especially when you talk about national security and you're thinking of extreme scenarios like a potential war, how is this playing into these relations?
Yeah, I think on both sides we've actually seen this idea sort of increasingly pick up, particularly in the last couple of years. The US has been explicit about this. Jake Sullivan quite recently gave a speech where he specifically said that export controls could be used potentially as a tool to sort of stymie China's technological advances and degrade its capabilities on the battlefield. Beijing officials, similarly, part of their focus on trying to, for example, shore up things like the EV sector, things like solar panel sectors, is partly in order to secure its own energy security. We see this sort of preoccupation with security emulated elsewhere, for example, food security and so on. But again, this focus on trying to make sure that China isn't reliant on, say, energy or oil that it's importing from elsewhere, that it can be somewhat more self-sustaining, particularly in a conflict scenario, perhaps with some of over the island of Taiwan, or perhaps with some countries where it has these sort of dual disputed territorial claims. Any scenario in which we could see a blockade of energy sources to China, essentially Beijing is trying to counteract that situation.
Asia government and economy correspondent Rebecca Chung-Wilkins there, and you can read the full story of today's big take on the terminal or by heading over to Bloomberg.com. And of course, geopolitics, a key issue when it comes to U.S.-China relations, and of course, how the presidential candidates position themselves. Let's listen in to the vice president speaking right now.
Of your family and the future of this country we love. And it will probably be the most important vote you ever cast. And this election is more than just a choice between two parties and two different candidates. It is a choice about whether we have a country rooted in freedom for every American or ruled by chaos and division. Many of you watching have probably already cast your ballots. But I know many others are still considering who to vote for, or whether you'll vote at all. So tonight, I will speak to everyone about the choice and the stakes in this election. Look, we know who Donald Trump is. He is the person who stood at this very spot nearly 4 years ago and sent an armed mob to the United States Capitol to overturn the will of the people in a free and fair election. An election that he knew he lost. Americans died as a result of that attack. 140 law enforcement officers were injured because of that attack. And while Donald Trump sat in the White House watching as the violence unfolded on television, He was told by his staff that the mob wanted to kill his own vice president. And Donald Trump responded with 2 words: so what? America, that's who Donald Trump is. And that's who is asking you to give him another 4 years in the Oval Office. Not to focus on your problems, but to focus on his. And Donald Trump has told us his priorities for a second term. He has an enemies list of people he intends to prosecute. He says that one of his highest priorities is to set free the violent extremists who insulted those law enforcement officers on January 6th. Donald Trump intends to use the United States military against American citizens who simply disagree with him. People he calls, quote, the enemy from within. America, this is not a candidate for president who is thinking about how to make your life better. This is someone who is unstable, obsessed with revenge, consumed with grievance, and out for unchecked power. Donald Trump has spent a decade trying to keep the American people divided and afraid of each other. That is who he is. But America, I am here tonight to say that is not who we are. That is not who we are. That is not who we are. You see, what Donald Trump has never understood is that e pluribus unum, out of many, one, isn't just a phrase on a dollar bill. It is a living truth about the heart of our nation. Our democracy doesn't require us to agree on everything. In fact, we like good arguments from time to time. Just think of your own family, right? It's not the American way to not have disagreements. We don't shy away from robust debate. In fact, we like a good debate, don't we? We like a good debate. And the fact that someone disagrees with us does not make them the enemy within. That's right. They are family, neighbors, classmates, co-workers. They are fellow Americans. And as Americans, we rise and fall together. America, for too long, we have been consumed with too much division, chaos, and mutual distrust. And it can be easy then to forget a simple truth. It doesn't have to be this way. It doesn't have to be this way. It is time to stop pointing fingers. We have to stop pointing fingers and start locking arms. It is time to turn the page on the drama and the conflict, the fear and division. It is time for a new generation of leadership in America. To offer that leadership as the next President of the United States of America. Now look, let me say, I recognize this has not been a typical campaign. Even though I've had the honor of serving as your Vice President for the last 4 years, I know that many of you are still getting to know who I am. Well, let me tell you, I am someone who has spent most of my career outside of Washington, D.C., so I know that not all the good ideas come from here. I am not afraid of tough fights against bad actors and powerful interests, because for decades, as a prosecutor and a top law enforcement officer of our biggest state, I won fights against big banks that ripped off homeowners, against for-profit colleges that scammed veterans and students, against predators who abused women and children, and cartels that trafficked in guns, drugs, and human beings. And I did this work because for as long as I can remember, I have always had an instinct to protect. There's something about people being treated unfairly or overlooked that frankly just gets to me. I don't like it. It's what my mother instilled in me, a drive to hold accountable those who use their wealth or power to take advantage of other people. The drive to protect hardworking Americans who aren't always seen or heard and deserve a voice. And I will tell you that is the kind of president I will be. And look, I'll be honest with you, I'm not perfect. I make mistakes. But here's what I promise you. I will always listen to you, even if you don't vote for me. I will always tell you the truth, even if it is difficult to hear. I will work every day to build consensus and reach compromise.
You've been listening to Vice President and U.S. presidential candidate Kamala Harris. You can continue watching this as a Bloomberg subscriber. Go to Live Go. You'll also find the big diary entries coming up today and later this week. Now, the U.S. election outcome will be closely watched in Asia as well for its potential impact on new energy industries. One of the biggest beneficiaries under the Biden administration has been solar power, where U.S. tax breaks are proving to be a boon to Chinese manufacturers. Let's get more from our climate and ESG managing editor, David Stringer. David, so President Biden's Inflation Reduction Act was supposed to help build domestic clean energy champions, but how are some of China's biggest firms benefiting instead?
Morning. Yeah, well, look, I think it's probably going to be a surprise to many to learn that these policies, this flagship strategy from Joe Biden, was intended to spur homegrown champions, domestic manufacturers of lots of key components for the energy transition. What we found is that many of China's largest clean energy firms are moving into the US, whether that's in joint ventures with US partners or building capacity on the ground, to access some of the tax benefits, and to gain entry into a market that's really critical. In one really flagship example, our reporters visited a plant in rural Ohio that's 49% owned by Longi Green Technology Co. That's China's biggest solar firm, a firm that, like many of its peers, has had real trouble getting exports into the US market. They faced trade tariffs, they faced other opposition. By getting on the ground, and having a presence, not only are they able to produce products, and get into that really critical market, but they're also benefiting from some of those tax advantages that were intended for domestic manufacturers.
And it is a key market when it comes to China's biggest green tech firms, right? What's been the response that we've seen in Congress, on the ground, and could this be jeopardized?
Well, it's fascinating. There's a real range of different responses. So, for American manufacturers, well, many of them are crying foul. They say this is completely undermining the idea that, the intention to build up local US homegrown, companies. In Congress, there is sort of increasing bipartisan support for new measures that would look to prevent Chinese-based, Chinese-tied companies from being able to access tax advantages. There's also a really noisy grassroots campaign in lots of places, where these factories are being built or have been built. And yet, these are places that are offering jobs, and often incredibly well-paying jobs. And there is quite a lot of community support for companies that are coming in and offering these opportunities. So it's a really complex picture on the ground.
Asia Climate and ESG Managing Editor David Stringer there. Let's get some more perspective when it comes to the state of climate financing, particularly in this part of the world. Diana Parusheva is the Managing Director at the Asia Securities Industry and Financial Markets Association, or ASIFMA. It's a pleasure having you here in the studio here in Hong Kong. I guess we'll start off with what's really top of mind for investors, climate and otherwise. How do you see politics, geopolitics, playing into the state of climate financing for Asia?
Thank you for having me. Indeed, a very good question. So politics intervenes everywhere, and climate finance is one of the things that is definitely impacted by the current political climate. So tariffs is one thing that, as the previous speaker just spoke about, is affecting finance in Asia, but also the whole dynamic of who will be responsible for the big bill that has to go in Asia to finance the million of infrastructure projects that need to take place for us to achieve our targets.
The question I always think of is, should markets and should investors be agnostic as to how we get there? So, should there be a concern that China is incentivizing and subsidizing and supporting its transition, and that's, being exported to the rest of the world? Is that a problem when perhaps it can get us to that transition point quicker and cheaper?
Well, in ASIFMA, we don't really look at this with this lens. We think actually blended finance, concessional capital, public-private partnerships are all needed because a lot of these projects are not bankable yet, so support from governments everywhere is needed. China has a way of doing it, Europe has a way of doing it, America has a way of doing it. So the question is how each of us is doing our respective parts, benefiting our respective economies, but also contributing to the overall objective.
So what are some of the measures that China has taken so far, Diana, and what more needs to be done then?
Well, since China committed to their net zero target, they actually done quite a lot. In 2021, they opened the biggest carbon market in the world, only addressing their energy sector. And as of 1st of January 2025, they'll add 4 new sectors. So this by far will exceed the European emission trading scheme, which is the other competing and very well designed carbon market. PBOC, the Public Bank of China, is also supporting lending in green and transition and sustainable finance. China is also doing a lot of green bonds and sustainability-linked bonds. I think in 2023 it overtook US and Germany. And Hong Kong, indeed, is also playing a considerable role, experimenting with digital green bonds. The first 2 issuances were in Hong Kong. So a lot has been done lately.
And Diana, you mentioned Europe as well. How much is there to learn from European rules and regulations when it comes to climate change transition?
Well, Europe is undoubtedly a pioneer in many respects, and policy for sure. As I mentioned, the emission trading scheme in Europe is the first attempt to actually control carbon emissions via these market schemes and employing market mechanisms. But also there is something else that Europe has done, which is not so evident in Asia and perhaps other places, which is to bring the population on board. Europe has spent literally decades and millions of euros of promoting this agenda. So they have the support of their population, which makes it much easier to actually swallow some of the not so sweet pills that go along with this transition.
Diana, really great to have you with us here in Hong Kong. Diana Parusheva, who's a Managing Director and Head of Public Policy and Sustainable Finance at ASIFMA. Just a reminder for subscribers, you can watch us live and see our past interviews on our interactive TV function, TV Go, that is, on the terminal. You can join that conversation by sending us instant messages as well. We'd also like to hear from all of our viewers, so we've put together a short online survey. You can scan that QR code on the screen right now and tell us what you'd like to see more of on Bloomberg Television, any other suggestions or feedback for improvement. Shery.
And Haidi, the U.S. presidential candidate and Vice President Kamala Harris continues her speech right now in Washington, D.C., saying that the biggest challenge right now for America is to lower costs. That costs are rising before the pandemic and are still way too high at the moment. Of course, she's making her closing argument, making her case for Americans to vote for her on November 5th. The market opens in Seoul and Tokyo are next. This is Bloomberg.
Nationwide. Restrict.
This is the Asia Trade. We're counting down to Asia's major market opens as we listen to Vice President Kamala Harris giving a speech right now in Washington, D.C. The presidential candidate right now making what her campaign calls her closing argument, Heidi, talking about the biggest challenge right now for America being to lower costs.
At this point of freedom for all Americans, or what she calls steeped in chaos and division. That would be what a potential second Donald Trump presidency would look like, according to Kamala Harris. Speaking there at the moment, that speech from the National Mall, and or I should say really kind of at the ellipse, I should say, is what we're seeing at the moment. And of course, markets are very keenly watching what will happen with this, given, of course, we also have the Fed, a lot of eco data due this week as well.
We're watching the Japanese yen very closely, and we've been on Japan yen watch for a while, but also because of the upcoming U.S. elections, a lot of people thinking that more than the Bank of Japan, more than the Japanese elections that we've just had, that potentially the U.S. election could have a more meaningful impact on the Japanese yen. If we see U.S. yields rising, if we see the dollar rising, that we could see more pressure for the Japanese yen, which is already trading at that 153 level. We're seeing the Nikkei gaining ground for a third consecutive session right now, but of course it's all about the Bank of Japan's rate decision tomorrow. Not a lot of movements expected from the central bank so far this week. But take a look at how the Kospi is coming online right now after it fell for the first time in 3 sessions. We've been watching the Korean won also very closely, right now holding steady. But the Bank of Korea Governor Lee Chang-yong has said that economic growth in South Korea could be closer to 2.2% this year, which is already a downgrade. We're seeing the Kospi fall about 0.5%, Heidi.
This, Shery, is, of course, we continue to really count down to the days for where Americans head to the ballot box. And, of course, some have already cast those early votes. Already, we are hearing at the moment from the Democratic nominee, the Vice President Kamala Harris. Let's take a listen to what she's saying.
That comes from making a difference in people's lives. And I pledge to be a president for all Americans. And to always put country above party and self. I love our country with all my heart. And I believe in its promise, because I've lived it. I grew up as a child of the Civil Rights Movement. My parents would take me to marches in a stroller, where crowds of people of all races, faiths, and walks of life came together to fight for the ideals of freedom and opportunity. I've lived the promise of America. I saw how hard our mother worked to give her daughters the same chances this country gave her. Growing up, I was blessed to have family by blood and family by love.
Hearing there from the Democratic nominee, Kamala Harris, the Vice President, of course, really in a speech that's been characterized as her closing argument as she tries to sort of streamline her policy priorities and really draw that contrast between how she's looking at what a second Trump presidency could potentially look like. We'll continue to monitor that, of course, as we count down to the big vote in the US, but take a look at what we're watching when it comes to US Treasuries, and it's really been quite a remarkable time when it comes to Treasuries at the moment. At the moment, we're looking, they're on track for their worst month in more than 2 years. It's not just sort of economic strength and positioning around what the Fed might do, given that we continue to get, signals of that resilience in the US consumer. We did get the JOLTS numbers looking a little bit shakier, and of course that leads into the Friday payroll numbers, which could also be a bit murky, given we know there are some distortions to be expected with that data set as well. So let's get some more when it comes to how we're navigating these markets with so many risk events there on the horizon. Sean Darby is Managing Director at Mizuho Securities Asia. What's sort of a priority for you at the moment, given everything that's going on?
Good morning. Well, I think the Treasury market's probably the most important because equities are going to suddenly find themselves with a big valuation gap. Although we've had very strong flash PMIs from the United States and the Q3 earnings season in the US has actually been very resilient, at some point rising bond yields are going to put a valuation constraint on the equity markets. And that in itself, I think, is not being priced in. So we've been pricing in better growth, possibly a Trump victory, but we haven't really put any sort of recognition that at some point these equity multiples are going to find themselves constrained by rising bond yields. I would also add that the flattening of the US yield curve is also not necessarily good for some of the pro-growth strategies that perhaps are in place at the moment. And I think you're coming into this last sort of 9 or so days of the US election, and I don't think most investors are willing really to take much aggressive positioning either.
We were talking a little bit about China earlier and how it's your view that there's some level of QE already going on. Does the outcome of the election, how American policy towards Beijing changes potentially to be even more hawkish or less predictable, perhaps have an impact on how well the stimulus works?
Well, I think the first thing to say is that they've probably held back on announcing the total package because they would want to see how the election pans out. So I think we will get much more details post the election, in which, in my view, is going to be contested. So we may be going through this through December and January. The second thing to remember is that there's always some front loading at the beginning of a new year. So putting whatever package they have already wrapped, plus what's going to happen at the beginning of the year, will actually start to produce a reasonable, decent amount of growth. But in the background, the PBOC is already expanding its balance sheet. It's not taking any chances that the fiscal packages are going to produce the level of growth that's required for job creation. And we can see that now with the total asset size of the PBOC rising to near record levels. And certainly in the last 3 to 4 months, it's actually grown quite substantially. And coming into year end, I think that accelerates. And we have to bear in mind that it's a pretty dire set of economic parameters in China at the moment. You've got negative money supply growth. That's never a good sign. So I think at the moment it's the PBOC that's doing the heavy lifting. It's doing all the same characteristics that we saw that Mario Draghi did when he came into the ECB, issuing long-term bonds, opening up the window at the PBOC for the banks to be able to do liquidity swaps. That's all the characteristics of QE. And as I said, now looking at the way the PBOC balance sheet is moving, it's starting to become much more aggressive. So I think in the first instance, we're going to still be relying on the PBOC.
Sean, great points about China, but what really caught my attention, so you think the U.S. election will be contested for a couple of months, and what could that mean in terms of risk-off moves around the world? I mean, we saw the Japanese yen, for example, behaving as a haven asset, especially even more than, say, the franc around U.S. elections. If we see a big spike there, could those carry trade unwinds be another problem?
Well, ironically, at the moment, I think if we come to some form of contested election or where the outcomes are very, very close, I think you will see the dollar tend to strengthen, and that would probably be against the yen at this moment in time, and probably the euro, and particularly against emerging market currencies. So I think in one way you would get that risk-off trade coming through in the exchange rate markets. I think it's a bit difficult to assume that the Treasury market is voting a Trump victory. The reality is US economic data has been good, and there's a large amount of Treasury issuance coming into 2025. And both candidates really don't have any plans to repair the fiscal position in the United States. So the bond market's on its own running on its own fumes. I think for equities, I think the reality is we're drawing into year end. It's unlikely people are going to put very aggressive positions on, particularly, as I said, if there's a growing probability perhaps of one or two of these states having to go back and recount, or where there's contest in those states. So I think, as I said, I think most of the move will be made in the dollar, probably in the dollar versus the DM and EM exchange rates.
For the yen, at least, is a U.S. election, what's happening around global risk-off, risk-on, or the Bank of Japan more important at this point? We do have that decision tomorrow.
So, again, I think the consensus and Mizuho's view is that there's not really going to be any change. I think the BOJ is a little bit trapped now. Firstly, economic data has been relatively soft. Secondly, doing a rate move now with the fact that you've had a pretty big sea change in the election in the election panorama in Japan might also not necessarily go down very well. And thirdly, I think if they are going to try to do anything with the exchange rate, it would probably be jawboning and trying some moral suasion to strengthen the yen. But ironically, looking at where the yen is trading now, you can assume that in the background we've got a reasonably decent carry trade that's come back in. And certainly looking at the moves in gold, crypto, and some positions in other fintech assets, we could reasonably assume that people have taken on a bet of shorting the yen in this period.
Sean Darby, always good to have you with us, Managing Director at Mizuho Securities Asia. And still ahead, we discuss why South Koreans are concerned about the security implications of the U.S. election. But first, China's reportedly considering over $1.4 trillion in additional fiscal stimulus. Details next.
Reminder that subscribers can watch us live and see our past interviews on our interactive TV function. You can join that conversation as well at TV Go. We'd like to hear from all our viewers as well. We've put together a short online survey. Scan the QR code on your screen right now and tell us what you'd like to see more of on Bloomberg Television. Any other feedback for improvement. More ahead on the Asia trade. This is Bloomberg. We are watching those shares of Asian AI and chip stocks this morning after AMD gave a disappointing forecast. Let's get some more with our tech reporter, Annabelle Jewellers. So the focus was on the outlook. And I mean, there was growth, but just perhaps some sense of a slowdown.
Yeah, it really just tells you yet again how much investors have such sky-high expectations around these stocks. And unless you're really beating by a wide margin, it just doesn't seem to be enough for investors. Because when you took a look at the outlook for the period, so they're expecting revenue of around $7.5 billion in the fourth quarter. The projection, or the average projection, had been for 7.55. So you're close, but you're not quite there. And actually, when you take a look back at, as you said, at the third quarter figures, revenue was up nearly 20% to $6.82 billion. And again, that was better than what analysts had expected. Profit as well, that increased to 92 cents a share. So that was sort of in line with expectations. What's really driving this, though, is the so-called AI accelerators. This is talking about AI hardware that can more efficiently handle AI workloads than traditional hardware in this space. But here they're really going head-to-head with NVIDIA in this space. And, of course, NVIDIA is just so much further in front, and AMD is just continually playing that catch-up and I guess not doing enough for people on Wall Street.
Enough from Alphabet, though, for the market.
Yeah, well, that actually a different story here. But again, all about that cloud. So I guess it's that broader theme. But you think about the cloud space, and this is something that's dominated by three players in the market. There's Amazon, there's Microsoft, and then there's also Alphabet here as well, and they're all competing for businesses and companies that are really racing to develop their own AI applications. The pie is just getting bigger, and so Alphabet continues to make more money in this space. Sales did better than expected in the period. Revenue was up to $74.6 billion, so better than the near $73 billion that was projected. You can see here advertising, subscriptions, platforms, devices, they all beat on the top line. So good figures for investors in the space. What else we heard in the earnings call beyond that was also efforts around the costing basis, because that's been another concern as well. How much are companies putting into their AI spend? How much are they getting out? And one of the ways, of course, to improve that is by bringing down the cost. And the CEO, Sundar Pichai, says that they actually are making that AI tool cheaper to produce or to run. And at the same time, they're also looking at alternative energy sources, and that includes nuclear power investments as well.
Annabelle Joel is there. You can also turn to your Bloomberg for more on all the major tech earnings this week, including Samsung, that's due out tomorrow. TLI Vigo is that commentary and analysis from our team of expert editors. Well, back to this story that we're following out of China, reportedly considering more than $1.4 trillion in additional borrowing in the coming years to shore up the economy and address local government debt risks. Let's bring our China correspondent Min Lo in Hong Kong. So it's certainly an eye-catching figure, and I do wonder, is this sort of in line with market expectations?
Yeah, well, 10 trillion yuan, that headline number is at the higher end of estimates. But if you break it down, it's about 6 trillion yuan to tackle local government debt and 4 trillion yuan to help local governments buy out these idle land and properties. And another additional 1 trillion yuan in other measures, which includes boosting consumption. And if you talk to our Bloomberg economics team, I know David Chu is quite hard to impress. He's saying that it's not quite enough. I mean, first of all, if you look at the direct consumption stimulus, that is quite modest, up to 1 trillion yuan. And if you look at the property measures, 4 trillion yuan, that's spread out over 5 years. That means it's about 800 billion yuan a year. Estimates are that it will clear up only 1.4% of the unsold housing stock on the market right now. So a very small share of the unsold inventory. And so it's going to still take a long time to destock the housing market. And even at 6 trillion yuan to tackle local government debt, estimates are that the shadow debt, the size of that is about 50 to 60 trillion yuan. So perhaps the size is still not far enough, but of course, you can't deny that it is a step in the right direction. And also there's talk that perhaps if Trump is elected into power, China could raise the size of that stimulus as well.
Yeah, Mimi, let's talk a little bit about that, because we continue to see the challenges for the Chinese economy, especially with the EU pressing ahead with tariffs on China EVs as well.
Yeah, well, this shouldn't come as a surprise, right? Markets had already priced in the risk of these tariffs of up to 45% for certain companies, despite months of intense negotiation. And this comes as BYD is expected to report earnings. And the good news is that the local domestic market still makes up some 73% of their total sales, at least last year. And domestic sales is expected to be still quite strong, especially given the stimulus measures from the government so far. Those subsidies to encourage equipment upgrading as well as automobile upgrading, that is supporting the sales of BYD cars. But of course, investors will be watching very closely how its overseas expansion plan and its profit margins is going to be impacted by those tariffs, because BYD did say that they are aiming to increase overseas sales to make up half of their total sales. So that's something to watch very closely. And of course, you know, BYD has already been effectively shut out of the U.S. market. So that's something to also watch as well.
We're China correspondent Min Lo there. And take a look at how European futures are trading at the moment. We are seeing a little bit of upside after those losses that we saw in the overnight session. We had seen some earnings results disappointing, and that took a chunk of the biggest moves. Novartis, the single biggest drag on the European benchmark after it posted disappointing sales growth. We also had BP weighing on the index. Banks were a bright spot after HSBC shares gained ground after it announced a $3 billion stock buyback. More ahead on the Asia trade, this is Bloomberg.
Donald Trump has spent a decade trying to keep the American people divided and afraid of each other. That is who he is. But America, I am here tonight to say that is not who we are.
Kamala Harris there presenting what her campaign is calling the closing argument at the National Mall in Washington. Well, investors are turning to Asian bonds to ride out the U.S. election risk, giving a boost to markets already benefiting this year from billions of dollars in foreign inflows. Let's bring in for more, Asia FX and rates reporter Tanya Chen. So what's the sort of rationale behind how this is a way to sort of leverage off that risk?
Yeah, a lot of the traditional safe havens you think about, like treasuries, for example, that whole rates market is getting repriced now over supply fears, and that's largely due to, whether the next candidate could be expanding that fiscal deficit. And then if you look at the dollar, volatility premiums are just rising across all of the pairs, and that's largely due to the tariff risks. Even, the yen, that's getting kind of rocked by right now the kind of political climate in Japan and the monetary decisions coming up later in this week. So you have to kind of look at, well, what are other ways you can get return in the FX and rates market? And so a lot of emerging market investors are still kind of doubling down on their emerging market positioning. And that was actually already a very popular trade kind of going into the Fed rate cutting cycle.
And some of that is sort of the China proxy story as well, right? So where do you see the biggest beneficiaries?
Yeah, so India and Indonesia, which were already big fan favorites this year, are still doing very well. If you look at the unhedged basis of the India government bond index, it's coming back like 9%. It's handing back 9% returns for investors. Korea is starting to kind of creep back into the story. We saw the central bank already embark on that rate cutting cycle. The index inclusion has really helped a lot of these kind of like local factor stories, right? Especially with India, with Korea. Thailand's also doing quite well. I think there's even some investors that are looking at dollar denominated debt like Sri Lanka and Pakistan because, just due to the Fed rate cutting kind of environment, they're going to have more access to funding and cheaper funding as well. And so when you take a step back from all of that, it's almost like the external factors and the election uncertainty is actually more likely to be of a concern front and center right now. But at least going into this election, these kind of EM bonds are doing quite well.
And yet U.S. Treasury yields have already been rising, right? We're talking about the worst month for Treasuries in over 2 years. So will there be any yield advantage left if this continues?
Yeah, exactly. So that's primarily like the biggest risk to this trade right now is that you're seeing some of that yield differential shrink for Indonesian government bonds, for India government bonds as well. But looking ahead, I mean, right now, I think everything looks quite peachy for a lot of these central banks, the EM central banks. A lot of them, have been managing their inflation trajectory. They're also managing their currency risk. So going ahead, at least for the near term, you're seeing that this global macro environment is actually very favorable for these EM debt.
Asia FX and rates reporter Tanya Chen there. As we're watching, of course, Asian sovereign bonds at the moment, Treasury yields continue their downside. We have seen the Treasury sell-off sort of pausing a little bit in the overnight session. We are now seeing the 10-year yield in China, for example, at that 216 level. The 10-year yield in Japan still below that 1% level as we head towards the BOJ rate decision, of course. Tomorrow, we're not necessarily expecting any change in the rate. Economists expecting the BOJ to actually hike rates either in December or January, and all of this as we continue to watch the U.S. elections as well, and what that really means, Haidi, when it comes to yields and inflation and the dollar as well.
Continuing to watch earnings as well, right, Shery? These are the ones we're following at the moment. And McDonald's quarter sales fell short of Wall Street's expectations on weakness in global markets, including China. However, the US was the bright spot, and the fast food giant says the $5 meal deal improved perceptions around affordability. The results don't include any impact from the recent E. coli outbreak that was linked to McDonald's quarter pounders.
We are certainly very sorry if someone got sick at our restaurant for eating an onion that we use on our QPC. And I am relieved that I think we are now past this and on the road to getting back to serving our customers.
Shares of Adani Enterprises jumped in Mumbai after nearly eightfold surge in quarterly profit. The flagship firm of billionaire Gautam Adani's empire saw a 663% jump in net income to over $200 million. Revenue from Adani New Industries soared by 62%, which helped offset a 25% revenue drag from its coal trading unit. Reddit surged in after-hours trading as its sales and forecasts beat analyst expectations. The social network posted sales of about $348 million in its latest quarter, was well ahead of projections. It also expects revenue of as much as $400 million for the holiday quarter. CEO Steve Huffman says Reddit was profitable on a GAAP basis for the first time since going public in March. Look at what we're watching, and of course inflation, that picture both across the global picture as well as the US very much in focus as we count down to that Fed decision. But take a look at the state of play when it comes to Australia. Third quarter consumer prices rising by 0.2% quarter on quarter. That is a little bit softer than expectations of 0.3%. We are continuing to see that trimmed mean CPI seeing a little bit of softness there as well, 3.2%. The weighted median CPI rising by 0.9%, though that was a little bit steeper than expectations there. The year-on-year number coming in at 2.1%, that is softer than the expectations of 2.4%. And we have seen the RBA really continuing to fall a little bit behind compared to some of its peers, the RBNZ, for example, and certainly the Fed in terms of staying on that more or less hawkish hold as a result of still sticky inflation. We did see some other data that could sort of suggest that that turn could be coming with home price gains. That's been a big sort of component of that inflation picture, likely slowing somewhat in October, Shery.
And Haidi, take a look at how the ASX 200 is trading at the moment, falling for the first time in about 4 sessions right now, down 0.1%. As we're seeing the Nikkei supported 0.9% at the moment ahead of the BOJ rate decision. The Kospi is down. So a little bit of a mixed picture across Asia right now. We're seeing materials and financials leading the declines in the South Korean market. And one of the stories that we're also watching around South Korea and North Korea related issues, President Biden saying that Ukraine should strike North Korean troops if they enter the country to fight alongside Russia. U.S. officials believe Pyongyang has deployed 10,000 troops, with several thousand moving toward Russia's Kursk region, where Ukrainian forces are fighting Russians. Biden was also asked by reporters if he was concerned about reports of North Korean troops already inside Russia.
I'm concerned about it, yes.
Should the Ukrainians strike back?
They crossed into Ukraine, yes.
Our next guest says the security implications of the U.S. election are the biggest concern right now for South Koreans. Eunjung Lim is professor of international studies at Kongju National University. It's great to have you with us. So let's start with what's happening with the ties between North Korea and Russia. How alarmed should Washington and Seoul be at this point?
Well, actually, we're very, very deeply worried about the situations. Again, as we all know, again, the Ukraine has been fighting very well since ever since the Russia invaded the territory. However, still the NATO European countries or even the United States have been very much cautious in order to just avoid any further expansion or escalation of the violence to other regions or to other countries. However, now, again, the North Korea, of course, North Korea, they have been just very closely and strongly supporting Russia's position, which is, of course, very rare in the international community. And now they have dispatched their soldier, young soldier, again, to the ground. So this means, again, this means, again, the European security issues now directly related to the security issues in this region, too. So I'm very, again, worried about the situations, and I'm also very much interested in watching how China will react, again, to the situations. Hopefully, I do think China will be very rational and very cool about the situations.
Right.
That's our hope.
And how could all of these developments unfold depending on what happens in the U.S. presidential election and who gets to become the next president of the United States?
Well, this is the closest election compared to any other election in the past. But its ramification will be huge, especially when we are witnessing two wars. One is, again, in Europe, and the other is in Middle East. Again, America's election result will make a huge impact to any region. And especially South Korea-like country, again, we are divided nations, and we are still, again, threatened by, again, the North Korea's different types of provocations. Nuclear is one, but, for example, cyber attacks or, all this dirty balloon things. Again, thousands of dirty balloon came to our territory across the DMZ. So which is really bothering the South Korean citizens' everyday life. And it can be really dangerous, and it looks like they are testing different technologies, which is very much scary too. So having had all these situations, again, we are now very cautiously watching the election. And of course, that's American people's choice. But if, for example, Mr. Trump is coming back, if so, again, my biggest concern is how sustainable and how robust the alliance can be. Of course, overall, I'm very much confident in the ROC-US alliance. But for example, like a host nation support, like a financial burden, that can be rediscussed if, again, Mr. Trump comes back to the White House, or he might be more like less willing to engage in the some other country or some other regions military security issues. So those kind of concerns, again, our concern might be less than the European nations' concerns, but still we have a very deep concerns about volatile situations in the upcoming months or even years.
How big is the concern when it comes to protectionism or, hawkish trade policy, particularly given how externally vulnerable the South Korean economy is?
Absolutely, because South Korea is one of the top trading countries in the world. And another thing is, again, the strong dollar. Dollar is getting stronger, and this might be just lasting regardless of the result, election result. Of course, strong dollar, cheaper Korean won can be helpful for some groups. Again, for example, like companies who are exporting their products. However, at the same time, we are very much, South Korean citizens now, we are very tired with the long-lasting inflation. So considering all this inflation situations and at the same time high interest rate, so everybody's like a disposable income can't come down. So we want to see more like a lower interest rate, at the same time lower inflation rate. But as long as dollar just remains very strong, our probably strategic choice can be very much limited. So that's another concern. Or more like energy/climate change related issues. Again, since the IRA, Inflation Reduction Act, again, the South Korean companies, they vastly invested in, especially southern part of the United States. But their concerns are, again, if some very significant changes, if significant changes have made. If so, again, the already invested infrastructure or already invested facility can be damaged too. So those kind of concerns are there too.
And you've talked about there are certain groups that are optimistic about change if it is the return of Donald Trump. What sort of groups, and I guess what sort of change would they be looking for?
Interestingly, we have, again, those more like optimistic groups in both sides, more like a pretty right and pretty left, because I feel like those people who want to be more optimistic about the Mr. Trump is basically they want to see some changes, again, in American foreign policy, especially toward, again, the North Korea. Because if Ms. Harris, Vice President Harris, is elected, if so, we can't expect many changes in the Washington's policy toward North Korea. And if so, that can be called probably just strategic patience, again, which is the term made even under the President Obama, but it lasted, again, during the Biden administration, and it might be, again, the lasting again, I mean, if, again, Vice President Harris is elected. The thing is, again, North Korea's, they keep just, raising the tensions, and now they are involved in the war in Ukraine. So, again, if there is nothing change, if there is not change, if so, again, the people can be more worried about all this stalemate situation. So people who want to see more changes, again, in the Washington's policy toward the North, it looks like they want to see Mr. Trump's victory.
Really waiting and seeing. Eunjung Lim there, the Professor of International Studies at Kongju National University. Really great to have you with us. And let's get you now to the latest Donald Trump's latest rally, I should say, taking place in Allentown, Pennsylvania. This is, of course, the former U.S. president, Republican presidential nominee, Donald Trump, who has, over the past few hours and days, really been trying to move past the controversy and outrage over racist remarks that were made at his Madison Square Garden rally to try and nullify what we've seen as a major address from the Vice President Kamala Harris earlier this evening. Really, she has been characterizing that as a closing argument in terms of this last leg of the campaign race. Over 75,000 people attended that closing argument rally. We're now seeing Donald Trump there in Pennsylvania. He had spoken earlier with a new campaign pledge at Mar-a-Lago with relation to the seizure of assets of drug cartels. But we'll continue to keep our eye on both campaigns as we count down to the election and looking ahead as to what the result could mean for Asia. Today, Avril Hong takes a look at how a Trump or a Harris administration might affect one of the world's most dynamic blocs, ASEAN.
President Biden may have skipped this year's ASEAN summit in Laos, sending his Secretary of State Anthony Blinken in his place. But there's a long-standing and strategic relationship between the U.S. and Southeast Asian nations. The U.S. is ASEAN's #1 source of foreign direct investment, funding health, security and economic projects in the region to the tune of $14.7 billion since 2002, along with $1.9 billion for humanitarian aid. Trade in U.S. goods and services was worth an estimated $500 billion in 2023 alone, but there are questions about future U.S. enthusiasm.
Whether it is Trump or it is the Harris ticket coming on board in January 2025, I think there's a concern that because the mood in America is turning inward and the mood is not receptive anymore to open multilateralism, that the American people expect their president, be it President Trump or President Harris, to be taking care of themselves first.
Defense remains the beating heart of the relationship. The US cooperates militarily with Vietnam, Singapore, Indonesia, Thailand, and perhaps most significantly, the Philippines. With tensions on the rise in the South China Sea and frequent clashes between the Chinese Navy and Philippine Coast Guards over disputed waters, Washington and Manila's Mutual Defense Treaty has already been put to the test. But if Kamala Harris wins the White House, her newly installed administration could resist getting further involved.
In terms of policy, we're going to see a lot more coherence in the way she articulates US policy towards the region. So we can take comfort in that. But she faces a very harsh political reality back home. And that's something that she has to balance out.
For Donald Trump, China continues to loom large, and he may demand ASEAN nations fall in line with his protectionist policies.
That relationship in terms of trade is probably a bit of a dampener. And in terms of defense or even just personal engagement, I don't think he has that patience to be engaging with the region.
Whoever wins the White House in just a few days' time, the stakes for ASEAN are high. Avril Hong, Bloomberg News.
And a reminder that subscribers can watch us live and see our past interviews on our interactive terminal, Function TV Go. Join the conversation by sending us instant messages as well. And we'd like to hear from all our viewers, so we've put together a short online survey. Scan the QR code on your screen right now to tell us what you'd like to see more of on Bloomberg Television and any other suggestions for improvement as well. We have more ahead on the Asia Trade. This is Bloomberg.
Well, Beijing's Made in China 2025 blueprint has made the country a world leader in many manufacturing and export sectors. Our Bloomberg Intelligence senior analyst Francis Chan joins us now to talk about where Beijing has achieved or fallen short of its national goals. Francis, and we know that this is so core to Xi Jinping's economic revitalization plan, right? But at the same time, you're seeing, of course, external pressures by the way of, EU tariffs, for example, or US countermeasures. So is it broadly successful?
I would say that this is a industrial policy blueprint released by China or Beijing in 2015 with the specific targets in 10 specific strategic sectors spread across 13 technologies. And according to Bloomberg Economics and Intelligence Analysis, we believe China has been gaining a global leadership in 5 of them for now. They are still catching up or trying to stay competitive with global peers in another 7. And only in one of the technologies they are lagging behind. The ones they got the leadership on would be electric vehicles and lithium battery, solar panels, graphene production, unarmed aerial vehicles or drones, and finally, high-speed rail.
In a number of those sectors, there's been a lot of complaints about overcapacity, right?
Sure.
How does this potentially get even more challenging depending on what the economic and political leadership of the US is?
Yeah, obviously, from 2018 onwards, the previous Trump administration has started tariffs, followed by Biden's administration with perhaps some export restrictions, especially on semiconductors. So for China, they are still working hard to get around those and trying to break those bottlenecks in the developments of semiconductors, the advanced node semiconductors, the critical equipments. But at the same time, we do see a continuous progress in the country, although the development may slow down because of those restrictions.
Is that a big reason why, when it comes to market performance, we are not really seeing that reflected when it comes to achieving some of those goals in the 2025 Made in China targets? We are seeing stocks really not catching up.
In fact, China has made certain achievements in those technological developments. But at the same time, during the past decade, China is still very heavily reliant on fixed asset investment, property market as the core part of the economic growth. And that said, those factors, or at least some setback in those sectors, may come more to the stock markets than what we have seen in the technological side.
Bloomberg Intelligence senior analyst Francis Chan there. We do have more ahead on the Asia trade. This is Bloomberg. A rally in Chinese bank stocks looks set to be tested as investors weigh high dividends against quarterly results. China's Big Four, the state-owned banks that is, will release third-quarter earnings over the coming days. Our Asia equities reporter Charlotte Yang joins us now to take a look at what to watch. And given how big the run-up has been, 25%, over 25% this year, we're going to see that selling pressure.
Yeah, so the banking stocks has definitely been this winning quarter in China market this year, given that it's been long seen as a more defensive play as they pay high dividends to investors. But this upcoming earnings test, which we'll be seeing a cohort of Chinese major banks reporting today, I think all the attention is focused on, how the banks' profitability are faring, given that there's weak demand, credit demand in China, and also the recent lending rate cuts. And I think, and also Bloomberg Intelligence has said that the impact of the bank deposit rate cycle that started in September 2022, the impact will more likely to be felt this quarter. And given that net interest margins, which is a key profitability metrics that people watches, has already declined to a record low level as end of June. So I think that area will attract particular attention from investors.
What levels are we looking at in terms of selling then?
Yeah, so I think, this really depends on how the earnings results come out. But to be sure, given that the sector still pays higher dividends than a lot of the other in the market, for example, I think the estimates is that the banking sector will, the yields they will be paying will be at 5.2%, which is higher than the average CSI 300, and also more than doubling in the yields they pay for 10-year government bonds. So I do think there's still going to be a great demand for those defensive plays, given that the market volatility we might be seeing with the election coming up and all of that. But with that said, I think how the earnings, how solid the earnings results will be a key thing that determines the selling pressure.
Charlotte, you mentioned some of the PBOC moves when it comes to the lending rates and how that's affected banks. What about some other measures that we're seeing from the government, finance ministry announcing special sovereign bonds, for example? How is all of that going to factor into these bank stocks into the future?
Yeah, I think what the latest measures from the finance ministry that there will be the support to the bank's capital. I think that definitely helps investors, give them some confidence that there's not going to be like any fundamental concerns with this largest bank's qualities. But I think, with that said, I think a lot of the times how this defensive play will play out gives on how the broader market is playing, especially if we're going to see more volatility coming up with the elections and how the broader market is trading. And because, for example, the CSI 300 banking gauge that we have seen outperforming for the first 9 months, they've already started falling a bit this month. So there's still a lot to watch.
Bloomberg Asia Equities reporter Charlotte Yang there, keeping an eye on the Chinese markets. Of course, as we head towards that open, we saw the A50 futures close down a little bit in China. We'll be watching not only those bank stocks, but also EV stocks. EU tariffs on Chinese-made EVs have now come into force as we're watching the offshore yuan also trading at the lowest level in more than 2 months. So we're seeing the downside pressure from the U.S. dollar as we continue to watch U.S. futures. Of course, the dollar hasn't done much overnight. We were really trying to gauge mixed data coming from the U.S. economy as we head towards the U.S. elections, as we head towards the FOMC meeting next week as well. U.S. futures up 0.3% as investors are also really taking into account earnings season. Tech giants reporting this week. Alphabet was rallying in late hours. That's it from the Asia trade. Our markets coverage continues as we look ahead to the start of trade in Hong Kong, Shanghai, and Shenzhen. The China show is next. This is Bloomberg.